In tonight's Business Insider, terrorism and the stock market. On Tuesday, U.S. stock indexes closed mostly lower as travel-related companies fell after deadly bombings in Belgium. For more, I'm joined by Jason Howell, Family Wealth Advisor at Jason Howell Company. Jason, tell us more about the implications of Tuesday's attack and terrorist attacks in general. Why do they affect U.S. and European markets, and how long will the impact last?
Well, apparently only a few hours, Morris. I mean, what we saw early on was the markets did react to the terrorist attacks and went negative for a little bit. By the end of the day, they caught up. In fact, it's been quite surprising. As a specific case, the S&P 500 over the past 7 days of trading, has only moved about 1% when it comes to volatility. Even the German DAX, which is the German equivalent of our Dow Jones Industrial Average with 30 German companies, it's barely moved. What we're seeing is terrorism is now baked into the market, and that's a great thing for our portfolios, but a sad commentary on the new normal.
You're right about both counts, and even the markets were very hesitant today, but they weren't crashing. And you're also following significant trading pains in China and Japan. Give us a state of the state for Asian markets. What's happening?
Well, China and Japan are not only our largest borrowers of our debt, they're the first and second or third and fourth largest economies in the world. And what's interesting, it's been worked really well for them to devalue their currency and to borrow our debt. And for a couple of decades, they were able to export a lot of products and do pretty well. But in 2016, in this global world, it's been a little bit different. China's economy is sputtering, so they can't export as much as they had hoped. And when it comes to Japan and Japanese companies, they're now competing with Samsung and Kia Motors. So there's just not as much market share for them as there used to be.
Jason, how will their struggles affect trading here in the U.S.?
Well, it used to be, and this is an old saying, that whenever America sneezed, then Asia and the rest of the world caught a cold.
That's right.
And now what we're seeing in the global economy is whenever countries in other parts of the world catch a cold, America starts sneezing. And what we need to do with more monetary policy rather than fiscal policy is arrest those symptoms, these symptoms of our sputtering economy, before we get what they've got.
Of course, the stock market's going to play a central role in this year's presidential election. Now Fortune magazine is out with a new poll. It found the economy is the most important issue among registered voters. Shouldn't really be a surprise. Right. The poll also suggests voters think Donald Trump would be the best thing for stocks. 27% chose Trump compared to 19% for Hillary Clinton. Jason, you looked at this survey. What stands out?
Yeah, I sure did. And the number one thing, of course, is that poll was probably taken before the attacks in Brussels. But the second thing is really that name recognition. We know that Donald Trump says that he's very wealthy. Most folks know the name of Hillary Clinton and the Clintons, and that they are wealthy. And in the finance world, we call this confirmation bias. If the person who's supposed to be out there helping me is rich and I'm not rich, then maybe I'll get rich like them. If you really want to find out what they're going to do for the economy and for your pocketbooks, open up their websites, take a look at their tax policy, take a look at their trade policy, and then make an educated decision.
Before you go, I'd like to talk about the Pepco-Exelon merger. It was approved today by the D.C. Public Service Commission. What happened and why should traders care?
Well, this has been a process of over 2 years. Exelon has been working with Pepco and with the district to figure out if this can work. $250 million plus has been spent, and I bet they are very, very happy today. It's a $6.8 billion merger. They will be the largest energy company in this space in the nation. And what we're really seeing, whether it's this merger or mergers in pharma, is people trying to get companies trying to get market share so that they can afford the lowering cost of things. This is how economies of scale work for companies, and when this happens, they benefit. Pepco, for example, has gone up 27% in its stock price from this morning to today. So it's really been a boon for them. I'm sure the CEOs are happy, and we're going to start seeing some changes locally.
Getting back to the point how you mentioned, and I think correctly, though, that the terrorist events are baked into the market these days. We've come up off the lows from February. Are you optimistic over the next few months that the stock market, our 401ks, are going to do all right?
What we're going to see over the next few months and really for the rest of the year is a lot of volatility, which just means up and downs in the market. I mean, there's been talk over with the FOMC wondering whether we're going to raise interest rates or not in April and whether we should. That's been spoken about as maybe having 4 raises this year. Now it's down to 2. So those interest rate changes are going to affect the market. oil is going to affect the market. Right now, oil is doing pretty well for themselves in a long time at 41 bucks a barrel, but that may go down again. So presidential election, there are just so many things that are going to affect this year's economy, and definitely your portfolios. Hold on to what you've been doing, what your plan is for your portfolios, and you'll be better off than watching a lot of news.
Jason Howell, Family Wealth Advisor at Jason Howell Company. Thanks again.
Thank you, Morris.